Yeah, the activity level at the bonds market and the direction really has been very similar to the Nigerian Stock Exchange like you started with. They are both long-term capital markets, and the major participants, that's PFAs and then FPIs, are showing apathy in these securities, that is equities and bonds for now. The little activities we see most of the time are on the short selling or simply a sell down for profit move. This has continued, especially where we've seen the PFAs in particular do more of short-term deposits with banks, and they're looking into CPs now. We're seeing some banks and other institutions float CPs, and then some other organizations float corporate bonds that have higher returns on what we had on the bonds, as in for say like May, when bonds, April, May, when bond yields were at 13.8. So that's what's happening. There's apathy in that market. The long-term capital market is bearish for now.
What would you say will be the implication, or is the implication so far for the yield curve?
Yeah, we've seen a steeper yield curve. At the beginning of this year, it was actually inverse, where T-bills were at 14.1% issued at OMO, and then bonds were as low as 12.8. Going into March, it was flat, and then April, May, we've seen a correction. It's steep and positive. T-bills have remained at between 11 and 12, except for November 29 that touched 9% today. The yields dropped as low as that. For bonds, it's continued to climb month on month since April, simply because we're seeing reduced demand, like I said earlier, from major participants, PFAs, FPIs, who currently are trading on the short end of the market, with the expectation that there will be higher returns for risk as we go into the election next year. Of course, we're in the third quarter. Looking at the last quarter of the year, we see this continuing with, sell down or simply reduced demand for long-term securities, that is bonds and equities.
This anticipation on the part of PFAs, the institutional investors, do you think it will be met, looking to get more to hold on to these securities?
Okay, on the bonds market, the yield at the last bond auctions stopped at between 14 and 14.8. Expectation in the market is that this month, by 25th, 26th of this month, when the auction takes place, yields could get as high as 15. In fact, some are so optimistic that it will get to 15.5 levels, but I'm looking at 15 levels because the secondary market is already trading at this level, 15.2 levels already. What's happening is that people will usually buy and not want to keep them. It's not as if they're buying to hold to maturity, they're buying to sell. So it's there's short-termism in view right now. People are not holding to keep because you could get better rates down the line. In December, you could be seeing for bonds 16%. Why do you want to hold at 15? So that's what's happening. That's the trend of the bond market. But on the T-bill side of it, it's liquidity that is pushing yields down. As we speak, FAC was posted on Monday. System liquidity got to 790 billion. OMO was issued, even though most of the participants in that market, PFA and banks, are asking for more. And if you look at the subscription level, the subscription rates, you see some people quoting as high as 18%. At the primary auction, they gave in, Central Bank Ministry of Finance gave in and sold 1 year at 13% last week. But this week, the central bank stood its ground and maintained stop rate for OMO at 12.15.
Okay.
They came yesterday, and then they have come today. We have not seen today's result, but it looks like they'll be selling at 12.15. And for as long as we have liquidity, I think we would buy at those levels.
Okay, Bankole, let's move on to the FX market now. So continued pressure on the I and E window, that's investors and exporters window, still some heat at that window, but some stability at the parallel market. And on the other hand, we're seeing a slight decline in the headline FX reserves. We're currently at around 45.6 billion US dollars. Do you think that this is something that could be a concern for the CBN, especially given that oil prices are now below $70 per barrel?
Yeah, it's a line they're watching. Minister Kachiku said that for as long as crude oil is above $70 a barrel, they are okay. So it shows they are watching them. And then the central bank in itself, I think they continue to intervene. They simply avoiding a situation where most of FX seekers would want to come in at the same time to buy FX. What we're seeing is that gradually they're selling on spot end of it, and then selling forwards also. So banks and most participants in the market largely are simply waiting it out to buy whatever they have to buy. And demands are being met on all windows, that is the wholesale window, the retail window, and then the I&D market in itself. On a daily basis, we see spikes to 364 levels, but the average deals are still being done at 363, 363.5. This is an increase from what we had in the first and second quarter, where 361.50 was the average. So as we turn towards the end of the year, where a lot of importers will be planning to bring in their wares for year-end sales or see year-end repatriations also of FX, the demand is expected to climb. It's what they've anticipated, it's what they've planned for, and of course, that's what the reserves are meant for.
Okay.